U.S. REITs edged down for the second month in a row in June. Joining me to discuss this trend is Brad Case, NAREIT's Vice President of Research and Industry Information. Brad, how did the REIT market compare with broader markets in June?
Yeah, as you said, the REITs edged downward in June. REIT investors lost about 4.5% of their total return. That compares with actually about 5.25% loss in the broader real estate market. It's actually the fifth month in a row that the U.S. REIT market has outpaced the rest of the stock market. Investors have to keep in mind, as I said before, that even during a bull market, about a third of all monthly returns are negative. So investors can generally expect to be compensated in other months for negative returns like the ones that they saw in June.
And how has that impacted longer-term returns?
Well, actually, long-term returns are still very consistent. Whether you're looking at 10 years, 15 years, 20 years, 25 years, REIT investors have gotten a pretty steady 10% per year total return. That's even after taking into account the effects of the very, very severe REIT downturn that we saw in 2008 and early 2009. You know, in the stock market over the last 10 years, REITs investors in the broad stock market have actually seen negative returns of about 1.5% per year. But as I said, REIT returns have been pretty consistent at 10% per year.
Are there any sectors that are performing better than others?
Well, for the most part, investors saw negative returns in most sectors of the U.S. REIT market. There are a couple of exceptions. Actually, mortgage REITs returned a positive return of about 1.6% during June. And that's important for investors because mortgage REITs are different from the rest of the REIT market, and so they represent a real diversification opportunity. Mortgage REITs were also much more badly hit during the downturn of a year and a half ago. So mortgage REIT investors have something to cheer about. In terms of other property sectors, healthcare REITs and specialty REITs that hold things like timberlands and data centers, they also had better results than the rest of the REIT market during June. But for the most part, investors seem to have been responding to overall economic indicators.
And how has the market's volatility played out?
Yeah, actually, that was another good piece of good news for investors. Investors were hit by terrible volatility in the REIT market a year and a half ago during the crisis. And during May of 2010, we saw a little bit higher volatility as investors seemed to be skittish about problems in Europe, especially in Greece. But those problems seem to have gone away during June, and volatility really came down dramatically during June again.
All right. Well, thanks a lot for the insight, Brad.
Mm-hmm.
For more information on this and other REIT news and analysis, check out REIT.com.